The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Well, hello and welcome to the COB. I'm Nadine Blaney. It's great to be here with you on RBA Day, the 18th of June, 2024. Today, we saw positivity straight out of the gates when it came to the local market, finishing up by 0.9% for the CBOE Australia Index. There was a little bit of a dip, happened right around 2:30 when the Reserve Bank of Australia did decide to leave interest rates unchanged at 4.35%. Look, some say they were hawkish because they really did reinforce that they are vigilant to the upside risks when it comes to inflation. But I was just reading a note from CBA calling the statement neutral. So we have a guest host with me, Martin Crabb from Shaw Partners, coming up in just a moment to discuss some of these key themes from the market today, including that vigilant stance coming from the RBA, Michelle Bullock, the governor, just speaking there, saying that the narrow path remains just that narrow, saying that we've got an inflation problem here now. And I thought it was interesting, her drawing the line between the differences in what's happened with the ECB and the Bank of Canada, two global central banks that have already cut. And she was at pains to point out that they're not cutting to loose monetary policy. They're just a little bit less restrictive, but that it was very specific to what's going on in their own economies. She pointed out that the Canadian unemployment rate is above 6%. I mean, think about us, we're at 4% here. So a little bit of breathing room, it seemed to me, is what she was saying, as opposed to what's going on in some central banks. Also pretty interesting to hear her say that we're at a little bit of a disadvantage here in New Zealand because we only get these quarterly reads on inflation. Yes, we have the monthly reads, but it seemed as if she wasn't giving those as much weight. So she was saying you've got to take into consideration a lot of the other data points, and it does remain very data dependent. Anyways, I digress there. Very excited about the RBA, even though it was a bit of a non-event at the end when it came to the actual move. We are watching banks moving into that, really shining, as a group, hitting record heights, but the miners still coming under a lot of pressure today. And that's even despite the fact that we saw iron ore prices rising just a bit through the Asian session. So there you go. BHP and Rio Tinto doing a lot of damage overall. Was Fortescue Metals off by 5.4%. A big block trade going through after market close yesterday, and so that really did take the wind out of the sails of the share price today. Interesting, it was a feature on the episode of The Call today, which is up online. You can listen to it in podcast form as well. Both of my guests really cool on Fortescue. In part, a few red flags. They've got a bit of a change in management yet again, and also a few question marks over its clean and green push when it comes to Fortescue Future Metals. But South 32 also mildly lower. Take a look at those banks, up by 1.7% for the nation's biggest bank, Commonwealth Bank. NAB up by close to 2%, but Macquarie 2.6% higher. Let's get some analysis on all of that. Martin Crabb from Shaw Partners is joining me now. Hey, Martin, nice to see you.
Good to see you too, Nadine.
So in your view, hawkish, neutral, what was the RBA?
Yeah, hawkish, I think. Just reiterating, as you said, the vigilance and the what I call the reverse hokey pokey. Remember that dance when you were a kid? You put your left foot in, your left foot out? Yeah. Well, they're ruling nothing in and out. So they're sort of ruling out the possibility so they're not ruling anything out, which suggests that they're as likely to hike as they are to cut. And I wouldn't be surprised when the minutes come out in a week or two's time that they are talking about hiking again. So I think the comparisons with global markets you just ran through are really interesting because, we all look at Canada, well, they've cut, as you said, firstly, their cash rates were much higher than ours. They were above 5, and also their employment market's a lot weaker than ours is. So there's reasonably good ideas. So we're at 435 and we're at 4% unemployment. So while that's persistent, I think Michelle Bullock also wants to give herself time to look at these stage 3 tax cuts because they're happening in a few weeks' time. And the centralised wage decision also kicks in on the 1st of July. So there's quite a lot of stimulus in the budget too. So I think they're just sitting back going, well, the economy's not weakening enough that we need to do something here. And there's inflationary pressures building in terms of this government stimulus and tax cuts. We'd be crazy to do anything right now. So obviously some commentators that I follow were talking about a November rate cut. And so I think the ones that were hanging on to that have just jettisoned it, said, no, it's going to be February, March at the earliest. So we've really seen the futures curve really flatten out. Just interesting, the dollar reaction. So obviously someone thought when they said no change that they said cut because the dollar sold off.
I was a bit surprised
like
by
for
that.
a nanosecond, and then it rallied. And since I published that, the dollar's back up through the mid-66s. So I think everyone's just saying, right, the RBA is definitely on hold. Now we need to think about the Fed and whether they're going to move to think about the currency. So, yeah, not a wild day by any stretch of the imagination. Very much a measured, press conference by Michelle Bullock. I think quite reasoned. Nothing alarmist, nothing to see here.
No, I think she's a very direct communicator.
Very straight shooter, yeah.
And it just responds to questions as they're asked. I thought the last one from Michael Stutchbury from the AFR was interesting, talking about trying to get the boomers, like, what's the language? Can you get them to cool down their spending? And she said, that's what I'm doing.
Yeah, that's what she's
we're doing.
Yeah, she's got a very blunt instrument, and I think she made the point as well that there's distributional effects, which for those who don't understand what that means, like, they've just got to hit the economy as a whole. They can't target boomers or superannuation people or pensioners. They can't target, with interest rates, it's a blunt instrument, and you're going to end up hitting the people with the debt. So they're probably targeting the people who can least afford to deal with it, but they just don't have any other way to do it. So just, the futures curve, they're really flattening out. So we're looking at basically, cash rates above 4 until probably the middle of next year.
Yeah, I think that in the wake of the decision, there was no real change. Markets pricing in about a 90% chance of a cut coming in February 1st. So, I mean, is it do you think that the consumer can stomach a central bank that is patient?
Yeah.
Because they have been able to in the States.
Yeah, I mean, the theory is, Nadine, that once interest payments reach 9% or 10% of household income, that you get a big nasty recession and people just stop spending. It's now at 12, and people are still ahead on their payments. So I think households have adjusted their budgets and adjusted their spending behaviour. And I think COVID, obviously, for some families, they really, really cut back on their spending dramatically during COVID because they didn't have anything to spend money on. And I think this frugality that was forced on us in 2020 and 2021, people have stuck with that. I mean, those people that have been able to travel overseas and eat at restaurants have done so, but a lot of families have just wheeled it right back in. So when the interest rate hike started to bite, people had the spare cash to deal with that. Whether that continues forever, I mean, the mortgage cliff has come and gone and we've sort of sailed through it. But I think the Australian consumer, just like they are everywhere else in the world, are very resilient. So I think higher for longer is not going to cause a massive recession. It'll continue to take the edge off aggregate demand, and we'll continue to see a slowdown in the economy. But I don't think it's going to collapse.
Yeah. All right. So let's, talk about what else was going on out there today. CBA.
Yeah.
Like the train that you just can't stop.
No one can explain it to me. I mean, I've been calling it as expensive and ridiculously expensive and extremely expensive.
Is it going to overtake BHP?
I just looked at the weightings this morning, and BHP has been the biggest stock in the market for most of my career. And we just see on that chart there, I think News Corp at one stage was a big part of our index before it re-domiciled to the US. I think News Corp at one stage was 20% of the Aussie market. So just leaving that one out. BHP has been a bigger market cap. Now, it's had some of its shares listed in London until they did the consolidation back in 2021. So I've adjusted for that, and BHP has been a $250 billion company a number of times in the past. But CBA is about to overtake it. And if we have another day like today where BHP was sort of flattish and CommBank was up yet another %, it's going to overtake it, which is quite staggering because I think of the earnings growth outlook for CBA and I just don't see it, and yet the stock's trading on 24 times earnings. BHP is obviously super cyclical. It's got copper, it's got iron ore, it's got the currency, so its earnings can move around all over the place. But CommBank, it's hard to see that company growing substantially. So it could be an interesting day where CBA takes over. I mean, it's happened before, but it's not the norm.
Yeah. Okay. Interesting. When you get market perspective like that for I was going to say a historical perspective, but I thought you might not like that.
No, it's very much historical. Yeah.
All right. So I'm thinking about like other sort of themes out there, opportunities in the market. BHP, I was writing on uranium today,
Right.
just sort of reminded me that we've got some quite bullish forecasts for uranium. Citi, Morgan Stanley, talking about the nuclear renaissance.
Yeah, well,
and I got to say, Shaw's was on this for
absolutely.
a long time.
My colleague Andrew Hines has been on this, very, very early. We raised a couple $100 million of capital for Paladin Resources, a long time ago. It seems like a long time ago now, to get the Langer Heinrich mine back in production, because we could see that the world's not going to get to net zero without firing up some nuclear, and obviously the Ukraine situation has made European countries look at that mothballing strategy they were going to do, Germany in particular. So, with the commitment in COP26 for the nuclear countries to rebuild their capacity or triple it, there's not enough uranium out there. So it's a matter of which mines come on stream. So we were very early on that trade, and Paladin's now gone up fivefold or something since then. So it's been great. We also like Peninsula Energy. We think there's a couple of emerging companies that have got deposits that look interesting, and there's a big one in Canada as well. Having said that, I think the ASX Standard & Poor's have a really good habit of getting some timing wrong, and they had Paladin in the top 100 pre-Fukushima, so they decided that the ASX 100 needed the uranium stock in there, and as of next week I think they're putting Paladin back in. So It's kind of like, the thing's been out of the index for 20 years sort of thing, or maybe not 20 but 15, and the market hasn't wanted to know about uranium, and now it's kind of going back in again. So it's just, I suppose it's signalling, maybe not the top of the market, but a maturation of the market. I think the market has developed and people have made a lot of good money. I think it does get harder from here.
Okay, interesting, because in addition to nuclear energy to help achieve climate goals, reading more and more about nuclear to power data centers, these small nuclear reactors. The technology exists, which I find fascinating. It's been in submarines for ages. And so now they're talking about not just buying and building data centers next to nuclear power plants, but getting those small modular reactors inside data centers themselves. I mean, that's such an interesting thematic.
It is a really interesting space because everyone's excited about data centers. We saw Infratil raise some money yesterday, about $1 billion to expand their data centers. So they own shares in CDCs, the old Canberra data center business, and that's got about 14 centres across Australia and New Zealand, and they're massively up their gigawatt expectations and how fast they can roll it out. And they're just saying demand is far outstripping supply. So, Goodman's another way to play it. But in terms of that, it's like, well, okay, you're building all these data centres, all you're doing is sucking power out of the grid, and we've got an energy crisis anyway. So I think a lot of investors are saying, don't come to us with a data centre story without an energy story to go with it. And obviously, if we're switching off coal-fired power stations, what are we switching back on? So maybe not an Aussie story. I think the path to get nuclear in Australia is probably quite a long and torturous one from a political perspective, because not both sides of Parliament actually want it. But I think in those countries that already have the capability, such as the US, it makes a lot of sense. So don't just come to us with a data center, application. Come to us one that's already got power, or you've got a plan to add power. So they probably go together.
Yeah, it's we're going to get left behind, but anyways, that's a conversation for another day. But Infratil, global data centers, next DC, like how do you guys play it?
Yeah, so we've got actually my colleague Phil Pepe, who comes on this show quite a lot. He's hosting a data center infrastructure conference on Thursday
Which
this
makes
week.
me think
actually.
Southern Cross Electrical. There's all the picks and shovels as well.
Exactly right. Yeah. So I mean, amongst the large caps, I think Next DC is an obvious one because it's already up and about and it's got quite a big market presence. Goodman Group's an interesting way to play it because they've got the land that the data centers are going to get built on. But I think Southern Cross Electrical is one that people wouldn't normally associate with it, but they're doing a lot of the picks and shovels behind that. So I think you can get a range of stocks that are not just going to buy data centers, because they are quite capital and energy intensive, and the returns are not as stellar as people think. But I think playing either the provider of the land or the provider of the services, which are Goodman and SXE, are probably not a bad way to play it.
Got it. Now that explains why Philip Pepe was unavailable for me on Thursday. There you go. he's got work to do.
He's busy. Yeah.
Look, a pleasure to speak with you. So
As always.
We'll catch up with you next week.
Thank you.
Good. Martin Crabb there joining us from Shaw & Partners. He's the CIO there. Okay, let's get to some of the corporate stories today. And to be honest, there weren't tons. It's pretty quiet out there on the corporate front, very much dominated by the macro and interest rate expectations. But Fortescue, we mentioned that block trade post-market close on Monday. Beach Energy strategic review. It's going to be slashing costs. and jobs, and it really is doing so in response to some shareholder angst, I suppose, about the fact that its share price has done really nothing. That was also mentioned on the call today. Tamboran Resources going after that initial public offering in New York. It wants to increase liquidity. It wants to tap into those really deep U.S. capital markets. And that was the stock of the day today with my guests, Philip Pepe from Shaw and Partners and Rudy Philippek-Veit from FN Arena.
I'm having lots of fun with your typical value investor on the platform formerly called as Twitter. They will tell us all that you can't possibly own NextDC, WiseTech or Goodman Group, but they will happily put their money in something that has no revenue, no profits, and big promise for the decade ahead. So I guess we all have a concept of risk. I would never own it because for me it's still an empty box full of promise.
Okay.
And
so we're going to avoid this one.
I like to have more than just a promise.
Shaw covers the stock. We have a buy rating on it, so I'll have to reiterate the house view and call it a buy. We think it's undervalued. We like what it's doing in the Beetaloo Basin, so that's the contractual obligation. We like the story. 400 mil market cap, looking to go offshore. Companies do that because they think, or they're frustrated with their current share price and they believe they'll get a proper rating elsewhere. I've seen this so many times before, it rarely works. They are mispriced. If you believe consensus price targets, consensus of 2, it's worth about 38 cents. I think we've got 37, so the other person must have 39. Trading at 19 cents, so should be twice the valuation. I think part of the issue is they're considering dual listing because they need capital to continue drilling, continue exploring, and when something's come a capital raise, you never at fair value because people wait for the capital raise. So personally, if I were them, I would have stuck to home base. Local investors would probably have supported it. Without being too familiar with this matter, companies often look to offshore for a re-rate and don't get it, and all they do is have the expensive dual listings. So I'll call it a buy because it is cheap and Shaw likes what they're doing, but if they're listening, I would tap the Australian market, not the US market.
All right, let's get across some of the leaders and laggards on market today. Atlas Arteria. Some of the interest rate sensitive stocks did pretty well today. There's no news that I can see associated with it. Pilbara Minerals in the lithium space, Sigma Health. So yeah, that was also featured on the call today. My guests were a little surprised to see buyers coming back in with those very big concerns about the ACCC hanging over the company and the share price gains that it's already seen. It was a sell from both of my guests on that episode today. NRW Holdings and Super Retail Group rounding out the top 5. There is always a negative side to the equation, I guess with everything, life included, but Fortescue Metals was the worst performers today. Bellevue, Gold Beach Energy, we already mentioned the news associated with that. Data 3 and 9 Entertainment. I swear I'm like psychic when I'm creating these lists for the call because 9 was also mentioned on the call today. Neither of my guests very enthused about 9 Entertainment either. It's off by 2.5% today. When it comes to the laggards and the leaders in the small to mid-cap space, let's see what we can find here. Race Oncology will be joining us tomorrow to update us on the news that sent its share price up 16%. And on the flip side, we've got, I thought it would be those in some of the resources space. Southern Cross Gold down by 9%. Melbana Energy, that's quite a big fall there. I'm not seeing any news associated with it, but keep in mind it is a 5-cent share. So tonight, this is an interesting one. We will get retail sales, so a little bit of insight into the U.S. consumer and how they are faring. We get May industrial production, and we get KB Home issuing earnings to get a bit of a pulse check on the construction space there, which I always find fascinating because, again, we've said it before, we'll say it again, not as interest rate sensitive in the housing market there as it is here. In fact, the obsession that we have with interest rates and on the day and when they move, I can tell you it's not quite the same at a consumer level as it is here. It's also worthwhile mentioning that we should be keeping our eye out for some of those Fed speakers The blackout is lifted post FOMC. We've had a number of them coming through already. And today, let me see, I just want to check. We've got, no, not seeing anything. Maybe, Williams and Harker. The FOMC's Williams and Harker are due to speak. So tomorrow we get the April meeting minutes from the Bank of Japan. They're really quick at typing those up and getting them out because that meeting, of course, just happened on Friday. We get some bit of data coming from New Zealand as well, but nothing big here. Speaking of here, let's take a look at where this local market finished. The COB Australia already had the curtains come down. We've seen the last of the day's trades go through the ASX and up by 1%. So a bit of buying into the close. 7,778 is the final figure. And sector-wise, we continue to look out for that strength coming through in the big banks. Utilities did well, healthcare, consumer discretionary. In fact, all 11 sectors ended higher today. Nice to see those gains on the boards after, a bit of a wobble coming through there. In fact, week to date, we've seen the market up by 0.7%. That is the COB for today. Thanks for watching or listening. And don't forget to catch up with all you may have missed online, ausbiz.com.au. We'll see you tomorrow.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil.
Oh, hey, Ken.
Here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible! 1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful! It's a bit intense.
Be better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.